Well, executives from two government agencies will sit down today to talk about how to work together better. The SEC and the CFTC are going to try to find ways to better coordinate. There's going to be some joint hearings today down in D.C. The intent is eventually to keep, tighter control over trading, more regulation, or just better, more efficient regulation. Joining me to talk about this is Mitch Tuchman, MarketRiders.com CEO. He's live in San Francisco. So, Mitch, what's your take on this? What needs to happen here between these two agencies?
I wish I could answer that directly, Jenna. You know, we have bureaucrats trying to argue over turf. That's really what's happening. In the past, both of these agencies have operated in separate areas with respect to how futures are regulated, because there really was never an issue. I think what's very interesting, however, is why there's an issue to begin with. And I think that's the real story behind all of this, a power grab between both agencies. A number of years ago, it was impossible for an individual investor to participate in a particular commodity. If you wanted to own gas futures, you'd have to understand how to trade gas futures. The same with oil. If you wanted to own gold, you'd have to go buy the bullion. This has all changed now with exchange-traded funds, which is really at the heart of this whole issue between the two agencies. Because while exchange-traded funds started off as being baskets primarily of stocks, there were a few companies that began creating baskets of futures. So now we have an exchange-traded fund called USO, for example.
Let me stop you for there, because that brings us to the point where some say you cannot regulate the futures market the same way that you regulate securities. And if the ETFs trade as securities, then but they're also part of the futures market, then how do those two things come together? Some say, though, Mitch, that we're really one of the only countries that has these two agencies separate. If you look at the UK, for example, other markets in Europe, they are under one umbrella. So is that what needs to happen here? And if that's the case, if these two agencies come together, then what's the effect on the average investor?
Well, frankly, I think it's a moot issue whether they come together or not. I think that's more of a bureaucratic issue. The real issue is that individual investors want these products, and because they're buying lots of shares of these products, instead of having exposure to the commodities markets with these futures, they're becoming the futures market.
Right.
I
only have 30 seconds here. So do you think that needs to change? What change needs to happen? Does more regulation need to happen, or we have adequate regulation right now with that change in the market?
I think we have adequate regulation. I think this is a market issue. It's driving premiums up on these securities, but there's really no way around it because it's all about investor demand. So the bureaucrats and the regulators can have all kinds of discussions. I don't think it's going to make a bit of difference.
All right, Mitch, appreciate that perspective. We'll talk to you again next hour. Again, Mitch Tuchman out there in San Francisco. Talk to you again.
Mitch Tuchman is with us as well, the CEO of MarketRiders.com. Mitch is out in San Francisco. He's been with us all morning long. What do you think, Mitch? Is the airline industry going to get things turned around or what?
I don't think so. I don't think this is going to happen anytime soon. I think the most alarming part of the $6 billion loss in the first half of the year was that it was $2 billion in the first quarter, $4 billion in the second quarter. Now remember, this is an industry that's raised $15 billion this year, 12 of it being in debt. So they basically raised enough money to lose it all in 1 year at the Q2 run rate. So I'm not too bullish on airline stocks at all.
Well, Charles, people still have to go place to place. Is there any maybe specific company you like within the sector?
You know, over the last 10 years,
of course.
This is for Charles. Mitch, I'll get your reaction in just a second.
Over the last 10 years, I think the only two companies that ever really were compelling investments were Southwest, which at one point was 50% of the entire U.S. airline market cap, and JetBlue had that nice run there until they began to expand. This might be the only industry where we can say, you know what, let them have collusion. I mean, just, go ahead, you know what, give them a waiver, let them get together, let them do some price fixing. This might be the only industry where I think we might be able to go ahead and let them have some sort of illegal collusion, because since 1979, more than 100 of these airlines have either gone out of business or had to reorganize. It's just an incredibly flawed business model. I don't know what else to tell you, but to Mitch's point, it's hard to look at them as investments.
And Mitch, I mean, we were talking about company specifics, but I heard you laughing there. I have a sense you might agree with Charles.
Well, I totally agree with Charles. I mean, as he said, the business models, I don't know. It's flawed, but it's necessary. It's capital intensive. Fuel prices have doubled this year. Not to mention the fact that technology is just making it so easy to do business at your desk. I'm having a conference call tomorrow morning with an engineer in India, with an engineer in Brazil, and me. We're all going to be looking at each other on one screen with our faces, and we don't have to fly anywhere. So I just wonder when the government's going to have to do something to step in, because it's really will be a matter of national security.
Well, if you get that set up in your office, you're going to save us a little bit of money. Maybe we don't have to use the satellite space as well.
That's terrific.
But I would say to Mitch, you need to find an excuse to go to Brazil, my man.
Yeah, that's right.
I agree. What am I doing in my desk when I could be in Rio?
Yeah, that's the larger question. All right, guys. Thank you. Very good point, Charles. Again, it's on fire today.
We've heard about it for months now. Is this a case of perception becomes reality, or is this a case of market fundamentals actually kicking in after a pretty strong run?
My God, the market is full of superstitions like that. What happened to sell in May and go away? That would not have worked this year. Wouldn't have worked in 03. But sure, people have traditionally looked back at all the statistics and say September's the worst month of the year. I would not predict the future. I'm not in that business. However, I think that we're going to have a little bit of a correction here just because this market has rallied so powerfully, but I don't think it'll stop. I again look at, like we talked last week, at the fear index, the VIX, which rose dramatically yesterday. Right. The VIX index rose dramatically, and last week we talked about VXX, which is an exchange-traded fund. It's a basket of puts and calls that allow you to trade on the VIX, which is really just a measure of how much people are freaking out.
And they're pricing in more freaking, Ashley, as the year goes on. It looks like additional freaking out.
Well, it was up 4%. Yeah, it was up 4% yesterday. So, you know, if you watch that, I think that's a good indication as to if you're going to add to equities, wait until that gets pretty high again. Okay. And then you're in pretty good shape.
All right. Well, we were going to let Ashley weigh in, but he's had enough to say this morning anyway. We got to run. Thank you, Mitch, for all the time out in San Francisco. Thanks.
Good. Thank you.
I was just going to